Pretty big day for the market here. We thought that with NVIDIA having an incredible earnings report that the NASDAQ 100 would just be soaring today, but it wasn't. It opened up strong and then it spent the rest of the day fading in a way that was just extremely dramatic. You had the NASDAQ 100 down 2.1% today. You had the S&P 500 and the Russell 2000 down 1.4%. And this is on a day where if you were just looking at what happened post earnings yesterday for NVIDIA, you were thinking the market's going to rally like mad tomorrow. It's going to build on the gains from yesterday. And we're going to be talking about the Qs re-challenging the recent highs of this year. But that wasn't the case. I actually had 3 positions that I came in today with that I was long on. I was playing the bounce, and I wasn't planning on holding them into Jackson Hole or not, but definitely the sell-off speeded that up some. I was long on QLD, which is a 2-to-1 inverse of the NASDAQ. I was long on Amazon. I was playing the bounce off of the rising trend line there, and I was long on IWM. I just got into IWM a couple days ago. I sold IWM for like a 0.5% total on the gain. I took like a third off yesterday. I took 2/3 today. And then I sold Amazon for like a 1.8% profit, and I sold QLD for a 5.5% profit total. Very aggressive on the profit taking. When I started seeing that market slide a little bit too much there in the early going, I used that as my cue to go ahead and get out of the market. Glad that I did, because now I'm going into cash for the Jackson Hole event tomorrow. He's supposed to talk around 10:05 a.m. Eastern time. That could always change, or he could be late, but it's nice that we get it out of the way early on. We don't have to worry about it the rest of the day, but we should get a reaction pretty quickly. Now, you want to be careful in the sense that last year when he talked, everybody thought he was going to be dovish. Everybody thought he was going to goose the markets higher, and he pulled the rug on everybody. He came out, he looked mad, he looked angry, and he's a wrecking ball. He really is. He's like a bull in a china shop, or in some cases a bear in a china shop. He doesn't really give a flying rip about the overall market and what sometimes he can do to it. And so there is the chance that he could just completely tank this market, especially if he's wanting the market to start being more aggressive about pricing in future rate hikes. If he can scare the markets, you can almost get the markets to do the job of the rate hikes without having to actually raise the rates. So tomorrow's a big event. We'll get it out of the way early on, and then I can potentially get short on the market. Now, if the market decides to rally off of it, that's always the possibility too. Then I have the flexibility to be able to go either way. But right now, I'm looking to position myself short going into tomorrow. Let's look at the charts, though, so that we can get right into it. On the Qs, you have this declining trend line. This goes back to the July highs. People were thinking with the NVIDIA earnings blowout, I mean, I think they came in at like 13 billion revenue, and people were only expecting 11, that was a huge amount anyways. Just even they got 11 billion. But people were thinking that we were probably going to break through this declining trend line here, and it was going to be off to the races back to the July highs. Nope, that did not happen. And look at this. This is a huge, huge bearish engulfing candle pattern. You got this candle here. This was a good candle yesterday. It was a good bounce candle. A lot of people, especially with the NVIDIA earnings, thought that we were going to get a lot of good follow through today, and that didn't happen. But this bearish engulfing candle is essentially when you have the price opening above the previous day's candle, which is typically green, and then it sells off the whole day and it engulfs the entire candle bodies from the previous day. In this case, it could have like engulfed like 3 of these things. I mean, that is huge. I mean, you don't see that big of an engulfing candle pattern that often. I mean, that is textbook. I mean, if people will probably be referencing that candle pattern for years to come as the textbook version of a bearish engulfing candle pattern. So that's bad. We don't like that. But what we also have that's not the greatest thing for this market either is this massive neckline that's forming of this head and shoulders pattern. So you got the left shoulder, you got the head, and then you got the right shoulder. And it's very close to confirming. You get about another, less than 1% away from confirming this tomorrow. And it's happening a little bit faster than I thought it would. You also have a nice, this is turning into also a textbook head and shoulders pattern too, because you got a nice even left shoulder and right shoulder as well. And you get the head and shoulders pattern, for those who don't know, it's a silhouette of a human body. Again, like left shoulder right there, head, and then right shoulder. So like a silhouette for a human. And then you got this rising trend line. This goes back to the January lows right there. And you could see a test of this tomorrow. So that is not out of the realm of possibility that we get a test down to this like 350, 351 level. If that happens, then you could see a bounce off of that level. And you might be thinking that's a pretty steep drop. That's like 2.5%. And it is. But look at how much we've dropped from highs to lows today. That was a massive drop as well. So we want to keep that in mind. You also have this huge support level here to where if we do break this rising trend line, there's a good chance that we're going to be talking about testing this 317, 318 level before the end of the year. And that's the NASDAQ 100 analysis there. There's a lot going on. It doesn't look good. This is looking like an ugly topping pattern taking place. Now with SPY, similar stuff. You got this level of support going all the way across. With SPY, you have the head and shoulders pattern as well. So left shoulder, again, we're talking about that human silhouette thing. Left shoulder, head, and right shoulder. You got declining resistance here that it tried to break through today. Look at that. Tried to break through it. Temporarily, we were trading above that resistance, but it was only for a few minutes, and then we just completely fell apart. Also, what we have here that we also have in the NASDAQ 100 is a massive bearish engulfing candle pattern. So that's pretty big as well. So we break this level here. Then what I'm looking for is a retest of this 417, 418 level going forward. So that is very much in the view of this market. You can see where this whole market could fall apart like a house of cards. Now, check this out. Rising trend line off the March lows. We tried to get back above it today. You had basically converging resistance overhead, rejected price on both fronts. Also worth noting is essentially a bear flag pattern that has formed on this market here in recent days. So check this out right there. And we'll create a parallel line, throw that right there. And yes, you get your bear flag confirmed. And now we're looking for this head and shoulders pattern to confirm to the downside. Now, IWM, what do we got here? On IWM, you have the rising trend line that's been broken. Also, a bear flag pattern that has formed. Actually, more defined than what you saw on the SPY just then. Really nice. Also confirming. Don't really have as much of a good-looking head and shoulders pattern. You could make the case that it's a left shoulder, head, and you're trying to get a little bit of a right shoulder, but that's a tiny right shoulder. That's a dilapidated right shoulder right there. So I think what I'm more or less looking at is this as being a continuation pattern to the downside. You got some report at 180. If the bears are going to make something of this next leg lower, it needs to crush that 180 level and get back down to this March, May lows here. So again, IWM doesn't look that great either. Glad I'm out of everything, honestly. Okay, let's see the VIX. What we have here. Go ahead and throw up this slide right there. You can see it's been in a narrowing range. This goes back to 2021. Then we broke out of that narrowing range to the downside. Now, if I go ahead and just move that line out of the way for a little bit, you can see where this has been some heavy resistance of late, especially back on August 18th. We tested it and tested it again later on. Couldn't break through it. So now you're getting this big engulfing, bullish engulfing candle on the VIX, which is the opposite of the bearish engulfing candle, and it's setting up for a potential run back up here. And it was able to work off some of the overbought conditions. This one sets up for a nice move to the upside. T2108, this is the percentage of stocks trading above their 40-day moving average. It's sitting at 27% after today's move. Getting close to being oversold, but what I really like from a long-term investment standpoint is when you can start getting some of these readings down into the single digits, man, you can add some good stocks usually at that level. Don't forget to like and subscribe to my channel if you'd like more swing trading tips and analysis of your favorite stocks. Thank you guys, and God bless.